Hey everyone, welcome back to Corporate Dakota, the place where we dive deep into the nitty-gritty of company filings to uncover the real story behind the numbers. And speaking of numbers, ARVANA Inc. has just filed an amendment to its 10Q report, and let me tell you, it's quite the tale of restatements and financial repositioning. So this isn't just your typical quarterly update. This is an amendment, meaning they found some issues with their previous report, had to go back and fix them. They are restating their financial statements for the 3 and 9 months ended September 30, 2024, due to errors related to things like website development costs, professional fees, and stock-based compensation. Basically, they are saying that what they told you before isn't quite right and you should ignore the old numbers. Investors need to pay close attention here because this kind of correction can sometimes signal deeper problems or just a need for better accounting internal practices. This statement here is a really big deal. It explicitly tells investors not to trust the previous financial statements from their original 10Q. This is often a red flag indicating that there might have been significant misstatements or errors that affect the company's financial health. Let's dive into the financials, starting with the balance sheet as of September 30, 2024, and comparing it to the end of 2023. Total assets are sitting at about $21,759 in 2049 in 2004, $49,16549 in 2024, down from 21,20,049, $7 and $80 to over $1.38 million. This means while their assets have shrunk, their debts have grown, which is generally not a good sign. Looking at liabilities specifically, we see a pretty significant jump in current liabilities from around $338,000 at the end of 2023 to over $850,23. A big chunk of this increase comes from related party notes payable, which grew from $112,000 to $700,000. This is a huge increase, and it suggests the company is heavily relying on money from its own insiders or major shareholders, which can sometimes blur the lines of arm's length transactions. In the stockholders deficit section, we see that additional paid-in capital has slightly increased from about $36.5 million to $36.6 million. This usually comes from issuing more stock. However, the accumulated deficit, which is essentially the total net loss the company has accumulated over time, has also grown significantly from a negative $37.9 million to a negative $37.5 million to a negative $37.9 million to a negative $37.9 million to a negative $37.9 million to the negative $37.5 million to a negative $37.9 million to a negative $37.5 million to a negative $37.9 million to a negative $37.9 million to a negative $37.5 million to a negative $37.9 million. This shows the company is still losing money overall despite any capital injections. Now, let's look at how the company performed on the income statement. Total revenue for the 9 months ended September 30, 2000, 2000, 4005, $54. This is actually a tiny $64. This is actually a tiny 6.4 and 6.AT14, the 5V634 in the same period of 2024. Revenue dropped by almost 20% to $81.34 compared to $225.80. 20% to $18.1344. Revenue dropped by almost 20% to $18.1344 compared to $25.8164 compared to $25.80 in 2023, $4 compared to $20.58.80 in 2023. This suggests a bit of a slowdown in their charter business in the latest quarter. Gross profit, which is revenue minus the cost of services, actually increased for the 9-month period, going from $320.50 in 2023 to $21.62 in 2022.50 in 2023, a decrease of about 9%. For the quarter, it's slightly better, with gross profit increasing from $76.07 to $97.24. Gross profit was $29.203, a decrease of about 9%. For the quarter, it's slightly better, with gross profit increasing from $76.07 to $97.2224. Gross profit was $291.16 compared to $32.250 in 2023, a decrease of about 9%. For the quarter, it's slightly better, with gross profit increasing from $76.07 to $907.22. This mixed performance here could mean they are managing their direct costs better, but overall revenue isn't growing much. Operating expenses saw a substantial decrease. For the 9 months ended September 30, 2024, they were $357, down from $3,818.83 in 2023. This is an 18.8% drop. For the 3-month period, the decrease was even more dramatic, falling by over 55% from $1127.40 to $4995.25%, from $1127.40 to $4995.25%, from $127.40 to $49.522. The report attributes this to reductions in general and administrative expenses, including less stock-based compensation and executive payroll, which is good news if they are cutting unnecessary costs. And the bottom line, the net loss for the 9 months ended September 30, 2024, the net loss was $3,361.41, which is a significant improvement from a loss of $1116 for end 2023. That's about a 71% reduction in net loss. Even for the 3-month period, the loss decreased by about 51% from $127.2 on $49 to our $5. So while they are still losing money, the bleeding has slowed down considerably, which is a positive trend. This is where things get a bit technical with the restatement. They adjusted intangible assets upwards by $2,250 to account for capitalized website development costs. They also decreased accounts payable significantly, reflecting corrections to professional fees. Related party payables were increased by almost 10 ob is due soon. Scaled 17 on 45,554 Ls. It's looking at the detail of the stock. It mentions 1078, 45554 shares. Outstanding as of July 11, 2000, a fixed rate 11, 2025. This number is important for calculating things like earnings per share, and in this case, it's a constant number showing no major dilutive share issuances in the recent periods presented. Let's get back to the balance sheet restatements. Additional paid-in capital was reduced by about $18,000 due to corrections in stock-based compensation and accumulated deficit. The treasury stock, which is shares the company reacquired, was reduced to zero as they were reissued. These adjustments, while small in the grand scheme, show the company is cleaning up its accounting. The restatements themselves are quite detailed. For the balance sheet as of September 30, 2024, intangible assets net increased by $22,500. Accounts payable was reduced by $689.01. Related party payables went up by $96,064. Current portion of notes payable decreased by $75,29001, and related party notes payable decreased by $75,291, and related party notes payable decreased by $75,229, and related party notes payable decreased by $75,290 payable decreased by $70,50,200L1. The current portion increased by $41,440, $1,064 for $1,064. These all point to significant adjustments in how they classify their debt and how much they owe to related party notes payable decreased by $70,50,291, and related party payables went up $64,440. These all point to significant adjustments in how they classify their debt and how much they owe to related parties. On the statement of operations for the 3 months ended September 30, 2024, they reclassified lease revenue, increasing it by $12,000. They also moved costs previously listed as cost of sales into cost of services, which increased gross profit. General and administrative expenses were cut significantly by $77,196, partly due to stock-based compensation adjustments. Professional fees were also adjusted, bringing the total operating expenses down. These adjustments aim to present a clearer picture of their business as a charter operation. In the management's discussion and analysis section, they talk about how their charter revenue is expected to taper off in the 4th quarter due to the end of the fishing season. They also highlight the significant reduction in operating expenses due to lower stock-based compensation and executive payroll. They anticipate future increases in accounting and auditing fees, which is common when you're restructuring and dealing with restatements. Their plan of operation is to focus on marketing their fishing charter business and expanding services like dolphin tours. However, this requires capital for new vessels and equipment, which they currently lack firm commitments for. This means their growth plans are heavily dependent on securing external financing, something they've historically struggled with given their accumulated deficit. When we look at liquidity, working capital, which is current assets minus current liabilities, is a significant negative. It's minus $848,529 as of September 30, 24. This is an even worse position than the previous year. Their total liabilities are higher than their total assets, which is a classic sign of financial distress. They mention relying on related party debt to stay afloat. Cash flow from operations shows a continued outflow. They used $2,823 more cash than they generated from operations in the 9 months of 2024 compared to about $14,877 in 2023. This reinforces the point that the core business isn't generating enough cash to cover its expenses. Finally, the report highlights material weaknesses in their internal controls over financial reporting. This led to the restatements, and they've appointed a new chief financial officer to help fix these issues. This is really important because it means the company's internal systems for accurately reporting financial information were not robust enough. So what's the story here? ARVANA Inc. is in a tough spot. Their core fishing charter business is showing some signs of stabilization with reduced losses, but it's not generating enough revenue to be truly self-sustaining. Their growth plans are ambitious, but dependent on financing that isn't guaranteed, the heavy reliance on related party debt, and the significant restatements raising concerns about transparency and accounting practices. While the reduction in net loss is a positive step, the company's overall liquidity and capital structure remain a serious concern. They are essentially operating on borrowed time and money with a long road ahead to achieve profitability and financial stability. The market generally reacts negatively to restatements and material weaknesses in internal controls, so investors should be extremely cautious. Alright, what's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.